When I meet so-called financial experts today, most of them don't even remember 2008. They're so young, all they know is a bull market. All they know is that interest rates kept dropping, bond rates kept dropping, the price of stocks went up, real estate went up, everything was going up. We call it the everything bubble. Be careful of the age of the person you take advice from, too. Oh. So, a bond is this. Let's say if a bond is paying 10% is worth so much money. But if the interest rates, inflation goes to 20%, the value of the bond drops. And what most people do not realize, the bond market is 1,000,000 times bigger than the stock market. The point here is back when I was just starting out, very exciting times. And that's what I'm saying is how old was the advisor? But this is the other part about it is so many of these idiots out there, there's no cure for stupidity. We've seen a lot of it over hard times. But this, I have the 60-40 mix. That means they have 40% this and 60% bonds, and they're operating by these formulas that worked right after 2008. This ain't 2008. The point here, ladies and gentlemen, this bond market is the biggest in the world. It is the thing that keeps this whole place floating. It's what's keeping this whole world floating. I want to go on record in Rich Dad Poor Dad, I said savers are losers. Why would you save dollars when they're printing it? Counterfeit money. It makes no sense to me. The reason dates are important is things are changing moment by moment. And the end is near. We don't know which way it's going to fall to. Give us those 3 things you got to look out for. One of the things I'm happy about is I'm an old man. And I meet these young, I feel for these guys. they're saying, my dad gave me your book, Rich Dad, Poor Dad. I'm investing in real estate. I'm doing this. And I want to say, we've seen the euphoria, right? And in euphoric times, it's about to end. A fundamental investment, people look at a financial statement, income, expense, assets, liabilities. That's fundamentals. That's Warren Buffett's big gig. Technical, the ups and downs, basically the emotions and moods and the flows in the market.
Robert Kiyosaki stated that Buffett reportedly doesn't believe in technical analysis. According to Kiyosaki, this has led many in his generation to follow a buy, hold, and praise strategy, almost treating Buffett like a god. Kiyosaki questioned this mindset, suggesting that advanced technical analysis should also be considered. He emphasized that the real market has cycles, where everything that goes up must come down. He mentioned that shorting stocks is among the riskiest trades because it involves selling something you don't own. Kiyosaki himself spent 3 years studying technical analysis, but acknowledged that, at heart, he's a real estate guy, not a trader. He indicated that short selling, while potentially lucrative, is high risk, especially if the market moves against you. Kiyosaki gave an example. If someone sees Apple shares at $10 and expects them to drop to $5, they might sell 1,000,000 shares at 10, hoping to buy them back at 5. But if Apple's price instead rises to 100, they're left in a difficult position, having to repurchase the shares at a much higher price. Kiyosaki recounted how people often tell him they're investing heavily in real estate, citing his advice. He cautioned against this approach, particularly in a rising interest rate environment, which historically leads to a decline in real estate values. He also reflected on the current economic situation, noting that we're already in a recession and suggesting that a depression could be on the horizon. He compared this potential downturn to the Great Depression, which lasted from 1929 to 1954, indicating that it could be an unprecedented opportunity for those prepared. Kiyosaki also discussed the importance of experience in investing, sharing that he owns several tons of gold and oil wells. He pointed out that when oil prices surged from $30 to $130 a barrel recently, it highlighted the fragility of the middle class, as rising energy prices often lead to higher inflation and food costs. He criticized environmentalists, suggesting that their policies could exacerbate economic problems. Finally, Kiyosaki expressed concern about current leadership, mentioning Janet Yellen's focus on global warming during a time of economic uncertainty. He questioned the priorities of the current administration, including Biden and Kamala Harris, highlighting their apparent lack of focus on pressing issues like inflation, war, and debt. He underscored the importance of recognizing one's own investment strengths and weaknesses, comparing the cautious approach of real estate investors to the more aggressive tactics of short sellers.
Yeah, I don't own stocks, but I own gold mines. You know what I mean? And I own tons of gold that I control. And I own oil wells. I don't own Exxon or BP and all that stuff. I own the oil well. I'm a hard asset guy, but I'm still the fat ass turtle walking around the place. But I got to be ahead of the curve here. And that's when the changes started, because in 1971, Nixon took the dollar off the gold standard. And I was flying in Vietnam at that time as a Marine. I said, what does that mean? What does that mean? Well, taking the dollar off the gold standard said money became trash. And then I'd come home and my poor dad would always say to me, well, you got to go to school and save money. Oh, Jesus. I said, why am I going to listen to an old Japanese guy, my father? So I went to listen to an old Chinese guy, my rich dad. I get a little disturbed every time because it happens like 5 times a day. A young man or young woman come up to me, oh, I'm getting my real estate license. Oh, I'm buying real estate. I said, at the top of a market? You have no idea what it was like. Some of you were too young. I'd go into a Chinese restaurant and they had whiteout on all the menus. I like Chinese food. But anyway, so one day rice would be $1, next day it'd be $2. And they had to keep whiting stuff out. You know, I'm going, holy mackerel. And then I put together, when I was flying in Vietnam, why my rich dad, who was Chinese, said, watch out, because they took the dollar off the gold standard. They're going to print money. It's called money supply, not interest rates. So they're going to try and raise interest rates to slow down the economy, and they're going to exacerbate. We're in a recession already because things are slowing. The velocity of money is slowing at high rates of speed, but also it's going to crash the economy, and we may be going into a depression. Now, oh, you're such a bad news guy. I tell you something, I learned more in the 70s than I do today, because when I was trying to put a real estate together when interest rates are 20%, you get really smart. I mean, I had to be creative and all this, still make it cash flow. So ladies and gentlemen, it's only, how creative, how smart you are in the future and how resourceful and resilient you are. Because I'm afraid 2022, we're heading into a depression. There's going to be a recession, that's a given. We're already there technically. But a depression is going to be a whole nother Megillah. And some people will be wiped out. It's the last depression gave us communism. And I'm afraid this guy Biden and Kamala are agents. Of who? We'll know. But anyway, and then there's always a silver lining. If China invades Taiwan, I'm a billionaire. But other people get wiped out. It's the best defense you can have against Biden, Putin, Xi, Treasury Secretary, what's her name, Janet Yellen. Oh my God. And Powell. You have 3 clowns up there. And Kamala, the border czar, she hasn't been to the border. I was at the border yesterday, Mexican border. They're streaming across. They've opened the gates. Kids are making $1,000 a ride. So they rent one of these minivans. They can get 8 immigrants in. They're not from Mexico either. They're from all over the world. They load them into, I took pictures of it and they chased me away. But their high school kids are putting illegals in their vans, driving them north. So you have a crew of 8, $8,000. The rental van costs you $100. Really good stuff here. But that's Biden and Kamala. I cannot believe how crooked this country is. So I'm afraid, because I saw this all happening back in the 70s when I was flying in Vietnam, and it's coming true today.
Robert Kiyosaki argued that the 2008 financial meltdown was just the beginning, describing it as a major crash driven by credit default swaps, or CDFS. He claimed that the entire market unraveled, with the repo market collapsing not once but twice, first in 2008 and again in 2019. Kiyosaki likened today's leadership to 3 clowns, Biden, Yellen, and Powell, and urged people to educate themselves as the best defense against their misguided policies. He stressed that this period is historically perilous, citing Nixon's 1971 move to take the dollar off the gold standard as a pivotal moment. Kiyosaki noted that money can only be created through debt, which he links to the treasury market, a concept he feels most people don't fully grasp. He critiqued the common advice to buy treasuries and questioned the wisdom behind the 60/40ths investment strategy. According to him, Rich Dad's approach was always about looking at the edge of the coin rather than following mainstream advice. He also discussed the looming crisis surrounding pensions, using his father's government pension as an example of how such promises can be unreliable. Kiyosaki believes pensions are vulnerable to Wall Street's manipulations, labeling it as a heist and dubbing Hawaii the Communist Republic of Hawaii. He described how government regulations and ocean erosion are destroying private property in Hawaii, arguing that the state's Marxist policies prevent homeowners from making necessary repairs. Kiyosaki's vivid descriptions and sharp critiques paint a dramatic picture of what he sees as a deepening crisis.